previously, Bank of Canada slowed down the rate hike since last year. They already reduced the increase from 75 basis point to 50 basis point, and they signaled that further rate decision will depend on the economic data. So the recent GDP and the job reports shows that there's continued economic strength. Yeah, so when we are looking at the reports, the labor force report for December is out. Employment rose by 104,000 and unemployment rate fell to 5%. The economic thinks that the employment stat was much stronger than we expected.
Okay.
So we are expecting a 25 basis point increase next week.
Oh, wow. Another increase, hey?
Yeah, and we also expect that there may be another 25 basis point increase later on this year. But no date has been mentioned.
Okay. So, wow, another increase in January. So, and then another one, do you think they may be lowering the rate?
We think that the rate hike will pause,
pause
for the rest of this year. And majority of us expect that the rate will come down next year. And a few of us think that there may be a chance to start seeing the rate reduction towards the end of the year.
So knowing that, as a real estate agent, last year, the first quarter of last year is really good. And then the interest keep going up and transactions keep going down.
Yeah.
So it's harder and harder for us to put buyer and seller making an agreement together. So yeah, it's going to be an interesting year.
Yeah, and then on the other hand, the fixed rate started to come down at the end of last year.
Oh, okay. So is it easier to qualify?
It depends on which rate that you want to pick. But chances are when the fixed rate coming down, which means that in the future, in the foreseeable future, the variable rate is going to become down too.
Okay, good. So how do we get pre-approval? Because I've got clients that have maybe a few rental properties and they cannot get mortgage anymore. It's very difficult, the debt service ratio.
Yeah, so after the 2022's volatility, the expectation to get a mortgage approval must be adjusted accordingly. The banks are looking at the customer's financial situation more in depth. You have to expect that the banks, the lenders are asking for a lot more documentation.
Yes.
And a lot more questions.
And at the end, they still won't lend money.
It depends. It depends. So as a borrower, you have to expect that they are getting more information from you about your life.
Yes.
Yeah, and then if you are looking to buy, we'll suggest that you have to make sure that you familiarize yourself with your financial situation, which is income, down payment source, additional liquid assets, existing loan payments, and also credit ratings. Be prepared before you go into shop for a property.
Yes.
And most importantly, you should be talking to a mortgage broker like myself.
Yes.
To understand your mortgage qualification. And also have an open mind about lender options.
Right. Yes, exactly. So very important, if we're working with buyers, we should send them over to you to get them pre-qualified first. Because at the big banks, it's very difficult to borrow money. You have other options as well, right?
Yeah, we have access to alternate A lender or B lenders. So let me go through these lender options. So A lenders is very common. Everybody knows what's A lender. They're the big banks that you can see on the streets.
Right.
They typically lend to the prime customers with a perfect credit score, a stable income with a standard income confirmation. But not everyone will be the same. Right? So if you're looking to get something other than the bank's qualification, then you may want to talk to us to get access to alternate A or B lender. They are lenders too. They are good lenders too. They could be, just name a few, Vancity, GMF Financial, Wealth One Bank, CTBC Bank, Korean Exchange Bank, and maybe Equitable Bank.
So those are called B lenders?
Yes.
Okay. And what about the rates?
The rates, because they are being more lenient,
Oh, lenient. Okay.
and which means that they are taking a higher risk.
Okay.
So that means that they are going to compensate their higher risk by charging customer a little bit higher rates too.
Oh, even higher.
Yeah.
Okay. So they would be more expensive than the regular A banks.
Yes.
Okay.
They are usually taking a common sense approach. They are flexible in their income source, documentation, debt servicing ratio,
Right.
amortization, and also the down payment source.
Okay.
Yeah.
Okay. So yes, whenever you're thinking of buying, talk to a mortgage broker first, right? Get pre-qualified, because you don't want to see a property and later realize that cannot borrow money, or the interest rate may be higher than expected.
Yes.
Right. So that's very important. So buyers are facing with, like we mentioned earlier, higher interest rate, right? Higher interest rate and increased payments. If you're even a property owner and you haven't locked in your rate, you will see that your payments could be increasing. Or if some people that have a fixed payment, then you will see the interest portion has gone up quite a lot.
Yeah.
So if you cannot pay, then you have to fire sale. This is I think is a critical point for those that are holding on, and if they don't have the holding power, they may be selling, right? So if they're selling maybe a very reasonable price, we're seeing prices have come down, softening, and not as competitive. So as a buyer, you want to make sure you talk to a mortgage broker, get pre-qualified first, or if you have cash in hand, it's definitely a good opportunity to be buying. So it's give and take. Just depending on your real estate goals. So talk to myself or talk to Amy, see what your goals are for 2023.
Yeah, hopefully it will be a much better year this year.
We hope so too. It's hard in my like just this first month, I think it's a little bit challenging because there's so many rules, new rules, and I think the banks are changing their application process too. It's becoming harder to borrow money.
Yeah, but on the other hand, I heard that the price negotiation is happening again, which means that some buyers, they may hold off from buying, but some buyers, they may be able to take this as a good opportunity to pick up some good value properties too.
Yes, provided that the seller are willing to negotiate. A lot of sellers took it off the market. So we're seeing very low inventory. Very low inventory because a lot of sellers, maybe they secure the rate in 2020, and then if they have holding power, if I'm not getting my price, I'm not going to lose like 10% of my price. I might as well take it off the market, right? They will wait a year or wait until the end of the year when rates are lower and the market comes back up, right? So this is an opportunity time for buyers, right? Because now it's if you have your cash in hand, you can negotiate. For the sellers that are still on the market, they're motivated. Right.
Yeah, and also on the other hand, about rental property, because in the bank's world, when they do all mortgage approval, they are very strict on how much rental income they use. But we have lenders who can take a bigger portion from the rental income.
Oh, okay.
Yeah.
Interesting. Because dealing with tenants is a problem too. It is a little bit riskier.
Yeah, but the rental income is very good. It's looking very promising.
Yes, rental income definitely increase. So as a investor, really have to qualify, screen the tenants before renting them out.
Yeah, that's good advice.
Yeah, very important.
I'm available to talk to you, any one of you, if you have any questions.
And what's your contact number, Amy?
604-671-1264.
Yeah.
Thank you for having me today, Melissa.
Yes, thank you, Amy. Thank you for coming.
Thank you.
Happy New Year.